Hello, I'm Alan Kohler, founder of Eureka Report, which is now part of Intelligent Investor, finance presenter on the ABC News and a columnist for the New Daily.
And I'm Stephen Mayne, contributor at Intelligent Investor, founder of Crikey, shareholder advocate, and until tomorrow, City of Manningham councillor.
And we are
the Money Café.
Tomorrow, Stephen.
Tomorrow, 6 o'clock. I've got the message from the CEO, we're going to cut off your email hand and your pass, you got to destroy all documents. You get cancelled quickly when you leave office in politics, I tell you. So anyway, but freedom awaits.
You'll be walking out with your cardboard box, will you?
Yes, I know. That's right. I'm no longer walk around like I own the joint. Anyway, so... but more time for AGMs and corporate scandals and billionaires behaving badly.
There's plenty of corporate scandals going on. Now, speaking of billionaires behaving badly, we've had Richard White and Chris Ellison both under, what would you call it?
Media and investor scrutiny.
Exactly. 9 newspaper investigations of both of them. Richard White for, I don't know what you'd call it, sort of misbehaviour in his sex life, but buying houses for people women he's having sex with.
Backing their businesses and having sex with them and buying them houses and
overpaying them and stuff like that. So
and a little bit of crossover with WiseTech.
And Chris Ellison, there was a leak. I don't know, it's not quite clear where the leak came from, but the ATO, there was a settlement with the ATO over years of tax evasion, which is
very complicated and sophisticated and extensive tax management.
Yes,
by the billionaire,
and so he's kind of, I don't know he's complaining. He's apologising about that. I don't know.
Yeah,
but the latest story on Richard White, if I may, is in this morning's Financial Review with a memo from Christine Holman, who quit the board. And this email or whatever it is, memo has been leaked, explaining why she quit. And she says that the behaviour of the CEO has been witnessed by many, including other directors. Despite bringing this unacceptable behaviour to the attention of the chairman and other directors on numerous occasions, this behaviour has not been addressed. And instead, I've been told to have founder empathy and accept that this is how geniuses are. How about that? That is fantastic. Founder empathy.
I love Christine Holman, actually. I gave her a big pat on the back when she was up for election recently at AGL. And I said, we need more people like Christine who stand up and rattle the cage, because she also left Metcash early because she objected to the generosity of the CEO's LTI terms, and that was made public. And she also quit Blackmores early, which was another founder. So she will take them on and quit on matters of principle, and it's interesting to see the leak of the detail on this one.
She keeps getting board seats.
Well, we need more directors like Christine Holman who take them on.
Usually chairmen don't like having people like that on their board.
As troublesome.
Exactly.
Troublesome directors. We need more troublesome directors.
She was accusing Richard White of sustained intimidation and bullying in the form of aggressive emails, one-on-one meetings, public berating in both audit and risk committees meetings and board meetings. So look, Richard White's under enormous pressure, I would have thought, and the board's going to have to decide what they're going to do with him, honestly.
I do like their chair, actually. I know him a little bit, Richard Damery, because he was the Woolworths General Counsel who was in the trenches against Bruce Matheson over poker machines. So he's used to dealing with aggressive billionaires from his...
Right.
And then he was a rare general counsel who made it to chair of a big public company, and I think he thought this was going to be great, and then now he's got an absolute blank sandwich, hasn't he, to deal with here? The chair.
He does.
But what do you do? How do you kick a founder out when they control the company? I mean, it's from the Murdochs and Jerry Harvey down, it's the ultimate challenge, isn't it?
The only thing that Richard White has said is that he remains laser focused on the growth of the company. Good on him. As for Chris Ellison, well, I don't know. I mean, he had basically what was revealed was a past settlement with the ATO. They haven't actually, exposed current tax evasion. It's just something in the past.
And the issue there, the institutional issue is why does a billionaire get to do a settlement and there's nothing's passed on to other law enforcement bodies, etc., and how does that compare with robo-debt and how the little guy gets done over when they
that's right, and gets marched off in handcuffs.
But look, I say credit to the media as well. Like, we need the media, from the CFMEU or Four Corners working over Transurban on Monday night. And, 10 or 9, they've had the scoops with Chris Ellison, Neil Chenoweth, amazing work, and Richard White was an AFR scoop. And, of course, Channel 9's got their own culture problems as well.
Certainly do.
Which they are reporting at length.
They had an independent inquiry into their culture, which found it, as independent inquiries tend to do, which found that their culture was terrible. And so now there's a new chairperson, and
Catherine
an
West.
acting CEO. So it's an opportunity for a fresh start, wouldn't you say?
Oh, I think so.
Entirely.
Kate Jenkins did the review. She grew up on a Manningham apple orchard, Kate, and
Manningham apple orchard.
We used to buy apples from their orchard in big crates in the 1970s. But she's gone on to be the Sex Discrimination Commissioner, and now runs this consultancy firm, which has come in and done the report into 9. A lot of people complaining that it's anonymous. There's no one's getting named and shamed, and that's always a tricky issue with these reports. But the AGM coming up will be interesting. All 3 of these companies, WiseTech, 9 and Mineral Resources, have all got their hybrid AGMs coming up, and none of them are hiding behind the old physical you must turn up, like a Twiggy Forrest or a Kerry Stokes or a Solly Lou who will do that tactic. They're all allowing online questions, and I'm looking forward to lobbing a few at them.
So you're going to show up at each of these meetings, are you?
I am. Right now I'm in 3 meetings, Alan.
As we speak,
I've lodged questions this morning at Chorus, which is a $3.5 billion Kiwi telco, Challenger and IAG. So the beauty of online AGMs is you can log in an hour before the meeting, lodge your 6 questions, and go and have a coffee with Grandpa Kohler. And meanwhile, the questions are being read out.
Steady on, Grandpa Kohler, crikey. So why do you care about Chorus, the New Zealand telco?
Well, I like it because all the Kiwi companies, their AGMs are always earlier. So you get up early and you have a little warm-up session with a Kiwi company, and then you limber up for the Australians. So
you're using Chorus as a warm-up.
Yeah.
Warm-up
so I've done Auckland Airport, Genesis, Meridian, Fletcher Building yesterday. I missed EBOS yesterday, but I like the Kiwi AGMs because they have the Maori language introduction. They don't do REM reports. Voting, so I keep saying you're an international governance backwater. Why don't you voluntarily put your REM report up, you dinosaurs over there in New Zealand? So I'm this sort of sneering Australian from across the ditch. And
they must be a bit bemused at being grilled by Australian.
Well, they're
Stephen Mayne.
They're all listed on the ASX, you see, so they're all part of the same Link computer share registry systems, and so. Yeah, I do PNG. I'm even doing Indonesian Bank coming up, which is listed on the ASX. So it's quite. My dream is to ultimately sit here in Manningham and do, Facebook and British Aerospace, like do global AGMs. If we just get a global system like the wonderful Australian system, where online AGMs you can now do your damage in near neighbour countries.
So you're becoming a global pest, are you?
Well, I'm certainly annoying quite a few of the Kiwis, and I've a bit of PNG in Indonesia. So, but look, just the rest of today, we've got Reliance Worldwide, which is a $4 billion company. They've run off to Sydney for a physical meeting, so shame on them. But then there's APA Group Super Retail, which is another sex scandal issue with the CEO. Coming up starting in an hour.
What's his sex scandal?
Oh, well, he's had an affair, and General Counsel has complained about it, and she's left, and she's suing them for tens of millions. So there's litigation.
An affair with an employee.
There's litigation over the treatment of the female lawyers who complained about the CEO's in-house relationship. So that's lots of sex scandals at the moment, isn't there, Alan? But that's coming up at 11 o'clock in Brisbane.
If every CEO who had an affair would had to resign, there'd be none left, I'd suggest.
Yes. So, but look, the season's been quite good. I did like Alan Ridge, Ridge's Hotels.
Yes.
He's a billionaire, lovely old guy. Anyway,
how old is he?
He's into his late 70s, I think. So poor guy, he cops a remuneration strike because he can't vote his own controlling stake, and so a few minorities have caused him a strike. And he said, "Mr. Mayne, I'm not going to discuss my estate planning in public with you." Because he's got no kids.
What did you ask him?
Well, he's got no kids. And he's like Paul Ramsey from Ramsey Healthcare. So he controls the company. And so what's going to happen, Alan, when you go? Like, what's your plan? Who's going to run it? Is it going to be a trust? Are you doing the Paul Ramsey model? And he just very politely says, go away, mind your own business.
Fair enough.
Yes.
What's the Paul Ramsey model?
A trust, the Ramsay Foundation.
Oh, I
Australia's
see,
biggest charitable trust.
Yeah,
So
right.
a billionaire with no kids, what happens to the stock? Who controls the company? It's an interesting question for the thousands of minority shareholders who've followed the founder all the way and want to know what's going to happen when you go.
Right. So
anyway,
so we don't know who Mr. Ridge is going to
he
leave
won't.
Control of the company
He
to.
said it's a matter for the board, Mr. Mayne. I said, but you handpicked the board. What are you going to tell them to do? Anyway, this is a matter for the board. So one other little one from yesterday, we had the Tabcorp AGM. So I missed it, unfortunately, but Gillon McLaughlin's debut. And I thank them for releasing the voting data. And I'm just going to give you this little insight. So on Gillon's long-term incentive grant, the vote was supported by 98.6% of the voted stock. Okay, so you look at that and say, it's a landslide. But of those shareholders who bothered to vote, of the 170,000 shareholders, 1,079 voted in favour and 1,578 voted against. So 2/3 of the shareholders who bothered to vote voted against, but the actual votes were 98.6% in favour. So what that tells you is there's a bunch of cranky old white men out there who vote against every executive bonus and remuneration report determinedly, but they get swamped by the big end of town who support Gillon's incentives.
Isn't it possible that those cranky old white men...
I do it as well. I vote. I'm 55. I'm a cranky old white... I vote against all REM reports online. And
all of them?
Oh, these days I am.
Indiscriminately?
I've turned 55, so I've become cranky and I vote against it all. You know, you're overpaid, mate. You're all overpaid out there. But it isn't interesting how the retail shareholders, and this is why we need the data, because we don't bother to vote unless we know how we're voting.
But isn't it possible that those people who voted against Gillon's, McLaughlin's REM thing actually looked at it and didn't like it, that particular one?
But it's not out of step with the market. I mean, you know, it's peanuts and monkey stuff. If you hire someone, you've got to pay them. And there's nothing wrong with the structure of his bonus arrangement. But there's people out there, the retail shareholders, who think you're all overpaid, I'm voting against the lot. And a lot of them are angry because the stocks crashed to 40 cents or something. So the lower the share price, the bigger the REM report against vote by the angry white men out there, I find.
Right. And you're sure they're white?
I don't know, but I'm just, I'm just being stereotypical. So there you go.
What's been your favourite AGM so far? Come on.
Oh, look, I thought that... do you know the old GUD? They're now called Emotive. They're big sort of so a bit of a grumpy old guy, Chairman Graham Billings. And so I did the old, Carol Campbell has resigned after 3 years as Audit Committee Chair. Shareholders like to get some exit perspectives. Could Carol please talk about her highlights and any regrets?
Oh, geez.
And he didn't let her answer. So, let the directors speak, particularly the exiting female director. So he didn't let her speak. And then I said to him, mate, you've left $800 million on the table selling out of Breville too early. You sold the stock in 2012 for $82 million. It's now worth $870 million. Is this your biggest regret? You were on the board at the time. You've been here a long time. When are you going? This sort of stuff. No, it's not my biggest regret. Oh. I'm sitting there going, what's a bigger regret than losing $800 million by selling your 20% stake in Breville at $3.35 when the stock's now $34?
And
because the ACCC blocked them. Graham Samuel said that Sunbeam can't buy Breville and blocked it. So they dumped the stock and should have kept the lot.
So I wonder what his biggest regret would be.
It was like at Seek. I said last year, you floated IDP education at $3.50 or something. It's now $28. Is this your biggest regret? And Andrew Bassett said it's not in my top, or it's in my top three, but it's not my worst one. I'm thinking, well, what's worse than leaving $3 billion on the table? So anyway, but it's been a good season.
We'll never find out, probably.
No, it's been a good season. So it's going to get busier. I'm up to, I think I've done 24 in the last 7 business days. So I'm up to 70 odd for the season. I'll probably get to 130, I reckon, this year.
Stephen, all I can say is don't ever get a job.
No.
Because you won't be doing this.
Well, this is right, yeah. I can only do this because I've got the time. And no one owns me, so I can be rude to everyone.
Okay, before we get to this week's questions, here's a quick word from our sponsor.
Align your wealth creation goals with ethical investing through the Intelligent Investor Ethical Share Fund. Finding businesses that deliver long-term growth while meeting your ethical standards takes time and expertise. Intelligent Investor simplifies this by offering a concentrated portfolio of Australian and global equities, excluding companies that fall short of modern expectations. Build wealth responsibly with Intelligent Investor's socially conscious approach. For a limited time, invest in ASX INES with zero brokerage fees directly with Intelligent Investor. Learn more at offer.intelligentinvestor.com.au/INES.
Okay, first question from Jack. I know in your quarterly essay you highlighted the link between the introduction of the CGT concession and housing supply, but what are your thoughts on the effect of the other large tax scale tax change that occurred at the same time, the GST? This increases the cost of new apartments and houses and land packages by 10%, which often skews investor demand into existing housing. Could making housing GST free, like a lot of other essentials, help drive investment into a new housing and help with supply? Well, that's a very interesting
It is
thought.
a good point. I mean, why is fresh food GST free and it's school fees a GST fee, but a new apartment block in a cost of living crisis, 10% on everything?
I'm going to have to do another edition of the quarterly essay and include that in it, which is a terrific thought.
I mean,
Jack, well done.
Enormously complex to undo that, to tweak it now, but it certainly has added to the cost of housing.
Of existing, the new housing. It's certainly one of the taxes.
Far worse than
one of the many taxes.
Far worse than council taxes, Alan. Yeah, it's the federal governments that are doing the taxes, not little old councils.
Council taxes are an absolute disgrace, Stephen. Come on.
They will be in 2 days' time, but for the moment, they're very good. Right. Now, Celine says, thanks for your excellent podcast. I bought some Endeavour Group shares 2 years ago, which are underwater, and I bought some more a month ago, which are showing a profit. Can I sell the shares that I made a loss on without including the shares that I more recently bought at a lower price and show the loss when filing my tax return? So, Celine, that's actually very easy, that you can choose which shares you are selling because they're all the same. And so you can say, I'm selling these shares, which are my loss-making shares, but you've just got to be careful. Like, for instance, the only example I'd give you is that if you've got a share purchase plan coming up, a lot of people will sell $30,000 worth of shares to fund the purchase of a new $30,000 worth of shares, but that does trigger a tax event on the old shares. So it's better to wait until after you've been given the shares and then you sell them straight away, but then you don't get the capital gains tax exemption because you haven't held them for 12 months. So, yes, but you can choose to sell the shares you sell and do it to minimise your tax.
Michael says, last week Alan and James mentioned that they can't see regulators in the US allowing driverless cars anytime soon. Waymo are currently doing it already with rideshare driverless cars in San Francisco, Phoenix, LA and Austin. Okay. Now to my question, says Michael. What are the current laws around accessing my super? I was born in 1982. If I have enough money in super that I think I can hang up the tool belt when I access it, can I access it at 60 or earlier? You can, as long as you're in transition to retirement. You have to, if you look up, if you Google transition to retirement, you'll find out what the rules are around that. You can do that at 60. You can,
if you're retiring, or you got to.
Yeah, that's right. But there's no. You can work a bit. You have to work less. And there are rules around what you can do, but there's a transition to retirement situation between 60 and 65. At 65, you can get full access to your super.
And keep working. So 65,
you're fine.
You got the lot. It's a long time to wait, though. Julian says, why do you think it will take to reverse Australia's falling birth rate? You probably saw this week that the number of births was the fewest since 2006, which is a bit surprising given how much of population growth. And Lachlan's going on to mainly blame surging housing prices.
It's not Julian, it's Lachlan, right?
Yeah.
Yeah, sorry.
And blaming surging housing prices. So, the question is, what can we do with incentives or policies to turn around the plunging birth rate, Alan?
Nothing. We
already have free education, free Medicare. I mean, Australia's already got a lot of policies which helps with
it depends on kids. And also it depends on whether you're talking about a single country's population like Australia or the world. So the world's population is about to start declining for the first time since the Black Death.
And not before time too, because we're overpopulated.
Well, you could
overutilising the
you can make
global
that argument.
resource.
I get that, yes. So, but anyway, the world's population is starting to decline, but immigration means that Australia's population is going to keep growing. So I don't know.
Yeah, but I wouldn't make any policies. I wouldn't do a Peter Costello baby bonus type thing. Now, Trent says, will Alan consider reducing his appearance fee to appear in a Chris Kohler TikTok video? Maybe an appearance as a boomer dad hoarding real estate and jobs.
Well, look, Trent, I must say, you've given me a terrific idea. I need to start charging my children for my time. Because at the moment they all get it for nothing.
I was going to say,
honestly, they don't value it. I mean, they just sort of...
I was going to say, apart from your appearances on the ABC News at 7:15 every night, do you charge for appearances elsewhere? You're probably quite a lucrative circuit person, aren't you? Little side hustles there?
I certainly do charge. However, I don't do it very often because I'm too busy.
Yes.
So I'm not a frequent appearer at things. And my wife says I do it far too often for nothing.
Yes. Well, yes. Don't get in trouble with your better half. So,
well, I am in trouble.
Yeah. Too many pro bono speeches.
Exactly.
Alan, be disciplined.
Should put all these friends and worthy causes.
Can you come and yes. You're such an agreeable chap, aren't you?
The biggest time thieves are my children.
Yes. And your grandchildren, Grandpa, don't forget them. How many you got now?
5.5.
There you go, 5.5. Oh, well. Now, Rob says, long-time listener from before the divorce and first-time questioner, and he's 3 to 4 years away from retiring, but he's been not happy with his super fund Aussie Super, concerned about the recent fines and being pinged for greenwashing, and he didn't have a very good customer service experience with them. So he's worried, though, that if he rolls out of Aussie Super, is this going to cause a capital gains tax event or some other negative finish? So should he just stick with them for the next 3 or 4 years till he hits the finish line?
Well, yes, he probably should, but it won't cause a CGT event if you roll into another super fund.
Correct. Simple.
But really, there's nothing wrong with Aussie Super.
Aussie Super's fine. Yeah, that's right. And the $18 million fine is not going to hurt their $300 billion plus portfolio. So it's. I
mean, if their customer service, as you experience it, is no good, then okay, that's a reason for getting out, I reckon.
Yeah.
Sure.
Yeah.
Anthony says, I've got a question for Australian listeners moving overseas for work, e.g. Hong Kong. For example, if you were in your mid-30s, we'll be earning around 150,000 Australian per annum, selling your home in Australia and having 200k in super. What would you do for your financial future? Would you continue investing in your super? And how would you look to invest for long-term growth? What do you think, Stephen?
Well, if you're going to live in Hong Kong, and if your employer up there is not able to get the concessional tax rate for into your super, I mean, sort of what's the point? I would say. I mean, just save up there on your property up there or something. But look, I mean,
we can't give personal advice.
No, we can't give personal advice.
Anthony.
I don't know. I wouldn't keep. If you're living offshore, most people I would guess would not keep on topping up their Aussie super fund during a 5-year posting to Hong Kong unless the employer was doing it, because you can't, you're not being taxed in Australia because you're not living here. So.
Yeah, well, it depends on how long the posting is, really. I mean,
yeah.
Anyway.
Now, Gary says, I've been a long-term listener ever since a friend recommended your interview with Sally McManus, and I've been hooked ever since. Could you share insights into 2 or 3 company boards that you believe are well managed? What specific metrics do you use to evaluate their performance in delivering value to shareholders? You got any favourite companies that are well managed?
Oh, yeah.
Alan?
Sure. Pro Medicus.
Oh, legendary.
What a great company.
Legendary. What a great company there. No sex scandals there. They just keep on making a fortune with their secret sauce on medical imaging.
It's just terrific, I think they're...
I want to give a shout out to Suncor yesterday. Christine McLaughlin, she did everything right. She disclosed the proxies early. She followed the agenda at the AGM, unlike Transurban, which just did one job lot where you had to deal with everything at once. She disclosed the proxy voting results by shares and shareholders. She let the CEO talk about his LTIs. They were just very transparent, although she blocked Lindsay Tanner answering my question about, do you reckon that FIRB would block a foreign takeover of Suncorp? Lindsay, you've got political connections. I don't think it's appropriate for Lindsay to answer that, and that's a matter for the regulators, and I'm not going to comment. So she was a bit sort of unhelpful on that, but overall they've got a good board. I like them. Seek, I love as well. They've got a really a founder-led, but an aristocrat. I hate pokies, but Neil Chatfield and the aristocrat board.
I just think you should not. You should not give aristocrat. Come on, they're not. You should never give aristocrat a plug.
I have put my shareholder hat on. The stock's at 59. I told my mum to sell out at 40, and I'm counting the cost of that. After she inherited them from my dad, I said, "Get out of gambling, Mum. It's toxic," and the stock's gone up another $20. But she's still happy she's out. But look, they have been an amazing international success story, ripping people off, and they've got a good focus board. I don't know.
So I just want to shout out to, and I'm not sure if it's in the category of well-run company boards, etc. But Kobe Hannock, CEO of Weebit Nano, which is an ASX listed company.
Israeli? Are they?
Yeah. Well, Kobe, I interviewed him this week from Tel Aviv, right? So he lives in Tel Aviv, and I suppose therefore the company's based in Tel Aviv. And it's terrible over there. I mean, he's having to run down to the air raid shelter all the time because the bloody siren goes off, and because there's Hezbollah bombs starting to land in Tel Aviv. I mean, heavens above.
One of your recent interviews, you know how you interviewed the CEO of Capral, the aluminium? Yeah. So he's been appointed to the board of Fletcher Building because they're in crisis, and he was up for election yesterday. So I put your name in the question box. I said, great appointment with Drago, I think his name is, and I listened to his interview with Alan Kohler on InvestSMART, but I'm really annoyed as a Capral shareholder that he's got this moonlighting gig over here, and isn't he going to be too busy to do the job? And shouldn't we hire him as CEO? And they didn't answer it. They didn't ask it because he wasn't there because he was too busy.
Oh, he didn't show up. Oh, dear.
So my first attempt to plug you in a question got censored.
Oh.
Anyway, we've got a couple of female questions we must finish with.
No, I want to just do this. This bloke, Edo, got jet-starred, as he calls it.
Oh, jet-starred, yes.
Jet-starred flight from Bangkok to Singapore. Anyway, it was a shocking
customer service story. Where the hell is the ACCC?
And now Joe Aston's got a book out, which there's 2 extracts appearing on the weekend. One in Good Weekend. His book is called The Chairman's Club, The Inside Story of How Qantas Sold Us Out. And Joe Aston's the former writer of the Rear Window
the savage.
So he has got this book out. There's 2 extracts, one in the Good Weekend, I think the other one's in the Fin Review on Saturday. So you can read those extracts of his book, or then you can buy his book. And he is coming to Melbourne on November the 7th to launch his book with me, because I'm...
you're the
Melbourne
interview partner. So he's being interviewed by James Chessel in Sydney, the new boss of the AFR, and then you're the in conversation with probably a freelance gig, is it, for a mate? You getting paid for that one?
No, this is another free gig. Don't tell Deb.
Don't tell Deb that one. No, exactly. Well, I was just curious that Qantas is having their AGM on Friday. So like Four Corners timed their hit on Transurban for the night before the AGM.
Yeah.
To do maximum damage, and so Four Corners didn't speak to Transurban didn't get interviewed, and I asked about it, and the chairman goes, I can tell you all of the directors watched Four Corners last night.
I bet they did.
But the Qantas AGM is on Friday, just before the book comes out. Guess where they're having it? Hobart.
Oh, right.
Hobart. So if Joe wanted to harass them...
Is it a hybrid?
It's a hybrid, yes. Yeah. So I will be able to look, but who has an AGM in Hobart? Mainland company. I've never heard of it before.
Well, you need to get an early. Ask the publishers or Joe for an early copy of his book, so you can ask some questions out of the book.
I will definitely be mentioning Joe Aston in one of my written questions, and hopefully, unlike the attempt with you, it won't get censored out. No. But that will be very interesting on Friday in Hobart. Now we've got. We've only had one female question so far, so let's jump to Kirsty, who says, could you talk through the pros and cons of using investment bonds as part of an overall investment strategy, including property, super and ETFs? Also interested in pros and cons of using investment bonds as a way to invest for your children.
There's another question about investing for children too.
There is another question, about putting, I've got $10,000 into
Joey.
an ETF.
It's probably worth
mixing the two together.
Yeah, well, because Joey says, I've got 3 kids under 10, they've saved just short of 10K. It's under my name in an ETF, QUAL, Qual. I showed the older two the dividend statements and explained money is like a planted seed. It'll grow. Good on you, Joey. It's great for them, but I'll have to pay the capital gains tax. I'd like them to get the money either into their super the day their account opens or as a bonus to pay down their home loan. Is there a better way that doesn't leave me with a tax bill? I really don't want them to have it at 18, maybe 25. So you have to just suck it up, Joey.
Yeah.
You got to pay the tax.
You got to pay the tax for all the stuff you do in their names before they're 18.
Their children, there's just no way around it. I asked my accountant if there's any way around it, and the answer was no.
No, it's not. That's right. So I set up CommSec accounts for my 3 kids back in the day. I think we did the Rinker. There was a big Rinker. You buy 35 grand and sell for 37 grand, part of some foreign currency hype.
So they'd be millionaires now, wouldn't they?
Because
of your
didn't help them all. We've closed
investing,
accounts and I've done nothing for them.
Expertise.
But I just said to Joey as well, look, just I hope you're not still running a mortgage, and while you're putting money away for your kids, and don't forget about your paying for the school fees and stuff, Joey. I mean, if you put it into their super the day they turn 18, it's locked up for the next 40 years. So keep your powder dry for them buying houses.
So it's worth going back to Kirsty's question about investment bonds, which I think is a good way to go because they do provide a tax benefit, investment bonds. I can't remember what it is now, to be honest, but I think you've got to hold them for 10 years or something. Is that it, 10 years?
I think so.
Yeah. So there is if you hold them for a long time, I think it's 10 years, but you need to check it out. There is a tax benefit you can get, so it's not a bad way to do it for your kids.
But don't forget as well that just bonds generally, bonds is basically debt. The reason why Australia doesn't have a sophisticated retail bond market, like in New Zealand, I know this is different, but just...
This is different, yeah.
Just the general bonds, we don't have it because there's no franking credits. And so it's not tax preferred to buy bonds as opposed to buy dividends. So New Zealand's got this very vibrant listed bond market, new farm bonds and all these bonds. But here, because everyone's all about franking credits, the retail bond market is not very sophisticated, but everyone's into hybrids, bank hybrids, because they tap into the franking credit thing.
They do.
It's pretend equity, although ASIC's trying to, and APRA are waving red flags at the whole hybrid model at the moment as well.
With which, I must say, there is nothing wrong. I think it's a perfectly excellent system in Australia.
The franking credit system?
Yes.
Yeah.
And we haven't got any bonds. Who cares?
I actually disagree.
No, it doesn't
I think
matter.
it is it is a misallocation of capital. Stops companies going offshore because, CSL and all these great international success stories like Pro Medicus don't get many franking credits because they're making their money offshore. So it forces people to become local service sector oligopolies like big banks and big supermarkets when they should be taking over the world.
Okay, I'll wear that. That's fair enough. Okay.
Now, India, we've got to get our third female question in. Wants to ask about the crystal ball game online to test your investing skills, and was reminded about the original high school economics game is the ASX share market game, which she reckons is a good soft entry.
Is it still there?
I think so, yeah. So I like the idea of those sort of games to get people investing and, understanding the share market as opposed to speculating on crypto or something toxic. So, yeah, do those family share market game mock portfolio type things. I reckon they're a good way to chat with your kids and learn about the market.
One more question. Guy says, thanks for the wonderful insights each week. I'm curious to know what your thoughts are around the potential changes to capital gains and the impact it might have on supply of housing, I presume. Investors are discounted generously at the moment when selling a property interest and therefore encouraged to do so. I expect this may change once they are faced with the prospect of having to pay more tax. Many may decide to front the changes and get out while the going is good, but I suspect it may ultimately lead to less supply in the future once the changes are implemented. Well, firstly, there's no proposal to remove the 50% discount on capital gains tax.
That's right.
And there's no suggestion that it's going to happen. So, look, a lot of people say it should happen. Well, I don't know. Mate, I don't think it's going to.
No, well, I agree. And, I mean, Victorians this week have done the old stamp duty holiday for off the plan, which I think makes sense for encouraging new builds. And they've done a massive amount of rezoning in Melbourne and around shopping centres and shafting councils and lifting height limits and all sorts, upsetting the good people of Brighton and other NIMBY-dominated areas. But, yeah, I think that... do you think they will? I think they should move on negative gearing, but they won't. They should grandfather it and just go back to the shortened policy of grandfathering it and winding it back.
Yeah, totally. And I think they should reduce the capital gains tax discount, which was introduced in 1999 to replace the inflation adjustment.
Yeah.
That was when inflation was much higher than it is now. So the inflation adjustment would be roughly equivalent to 25% discount. So that's what it should be, I think. But, you know, and that again was what Bill Shorten proposed and lost. So anyway.
I think your essay should win the Book of the Year, Political Book of the Year. When's that coming out? When's that being decided? Did you make the shortlist?
I don't know. Hasn't been announced yet.
Vote for Kohler. Political Book of the Year, as decided by his mates.
But it's selling well.
Still?
Yeah.
Reprint after reprint.
I'm making actual money.
Oh, wow. You're not doing a pro bono. You've actually done a paid job for once.
This is
the paid job. And you're getting extra.
I keep getting checks in the mail. It's wonderful.
Gee whiz.
So this has never happened to me before.
First time you've ever had
a book that makes money.
This is like your LTI grant vesting or something. You've hit all the performance targets, Alan. Well done. Vote for that.
Thanks everyone for listening to today's episode of The Money Café. I'll be back next week with James Thompson. Send in your question to themoneycafe@eurekareport.com.au. I'll see you next week. I'm Alan Kohler, founder of Eureka Report.
I'm Stephen Mayne, and we'll see you in a fortnight.